You can see why they don't want to get down into the weeds. They want a Netflix multiple on the stock or something like it, and Netflix doesn't have a multiple because it gets down into the details of what the distribution costs are. It's all about the vision. And I do think Bob Iger has a good point, and what's really going to be interesting going forward on this, and they're kind of betting the company on the direct-to-consumer, but branded content in the streaming service. When you think about it, what is a Netflix brand that you can even think of? They do not have big brands on there. Amazon, same thing. Amazon has some other advantages, but look, there's room for another streaming service, and Disney's going to be the only one with, many household names appearing there, starting with the Disney brand itself, but then the action heroes, the Marvel, the Pixar. That's going to be an interesting strategy to me to see how powerful the brand is when you put it into a streaming
When you say
package.
brand, you mean franchises.
Franchises,
right?
exactly.
Not just a series title, in other words.
Right. I mean, there's a whole lot of movies under the Marvel thing, shows under the Marvel thing. But when there's the Marvel name on it, you pretty much know what you're getting, especially if you're, a young male. And this is working amazingly well for them in the feature film arena. Everybody thinks feature films are a cyclical business. How do you keep churning out hits? It still is somewhat cyclical, but Disney's studio performance this quarter was phenomenal, and that's a lot of that is this branded content they're putting out there. It seems to me there's an audience that will go to a Marvel film, pretty much whatever it is, because it's got the Marvel brand on it.
I mean, and that goes back a long way, where Iger said we're making too many kind of interchangeable-looking romantic comedies. It could be a Sony movie, it could be a Fox movie. But what's interesting is you named all those franchises that were all acquired.
Right.
And when Pixar was acquired, people said too expensive, crazy price, not much financials there. Marvel was considered too expensive. Lucas less so, perhaps, because they already established the path. But in other words, the investors are used to kind of looking at some noisy financial implications of these big franchise deals, and maybe direct to consumer. That's why they're getting the benefit of the doubt, because they already are a multi-billion-dollar spender every year on content. They're just going to spend on somewhat different content.
Yeah, well, they're going to have to spend a lot on this. I mean, what is Netflix spending? $8 billion or something like this?
$8 billion on balance sheet, but $12 billion this year of cash going out.
That's pretty capital intensive. This is a big business. So again,
when you don't have a 100-year track record of like a library, you have to go from scratch.
Right. Look, it's going to be tough for Disney. I think especially in the early going, because you've got Netflix that is not really looking at profit. It's looking at long-term investment and has done so very successfully. And the market has given them benefit of the doubt. Will the market give Disney the benefit of the doubt? Maybe. I think Iger is making a pretty good case.
And I don't know that they're looking for quite as much volume as Netflix. And you heard Iger refer to these third-party distribution rights. They're going to be buying in. They have the foreign rights or here or there. They're going to buy those in. It's going to cost them something.
Right.
But my sense, Jim, is that their strategy is more of these tentpoles that you're discussing. The franchises are going to be enough that you feel like you have to have the service. They may not have 100 different series at any one time.
Right, and I think what they're essentially doing is taking the strategy that has worked in the feature film division and they're moving it into the streaming service, building it around the tentpoles, building it around the brands. Now that, of course, to me raises a question about the Fox acquisition, which is not in the same, intellectual property tradition of the Pixar or the Marvel. They're buying a lot of assets there. They're buying a film division that, what do they make kind of adult. They make some specialty things.
They do have Avatar.
They've got Avatar. Avatar is I heard, Iger talking about Avatar on the call. Avatar is the one big brand they've got, a whole series of Avatar coming. But I don't think you pay that many billions of dollars just for Avatar. I'll be interested to see what they're really going to try to do with that. I mean, to kind of fill out their offerings with kind of adult, independent, Oscar-winning kinds of things. I don't, as an investor, I can't get too excited about that.
Just to quickly change gears to GE, Jim, while we have you. I mean, it's 30 cents away from a 7 handle. What do you say now?
It's astonishing. I mean, this is we're watching, the slow motion collapse of one of the great industrial companies of all time. And I think, I guess I've got to get busy, but we have to get to the bottom. What happened here? What happened in this power business? What happened in the Immalt tenure? The plant of the seeds of this absolute disaster. And it's not like other industrial companies aren't doing okay. What happened in this power business? Look, I don't know the answer to that, but I think investors ought to be pounding the table to get to the bottom of it. Where does it end? I mean, these numbers are terrible.
It's astounding. And a lot of the work you do, Jim, is on the board of directors. When I look back, of course, over that period of time that Immelt ran the company and have those same questions, you also do have to wonder to what extent. I don't know that a board is capable simply of understanding or really interjecting itself effectively in a complex company like GE. I think that's an example of how boards, they can only go so far.
Well, yeah, this was a blue chip board, no question about it. And maybe they were lulled a bit by the false sense of security of, decades of predictable earnings at this company and investor praise. But the fact is, they are prisoners of the information that they get. And who controls the information flow? The CEO.